All right. Hello, everyone. Hope you're having a good day. And I just want to give you a quick little talk about this concept called market memory. Now, as we know, or as we should know, there are some price levels in the stock market or any financial market. I'm just going to use stocks as my default, but any financial market, whether it's commodities or cryptos or so forth, there are certain price levels that just happen to have more importance than others. And we call these levels support and resistance. Sometimes a support level can stay intact for a long time. A support level is where there's more buy interest than there is sell interest. So if the market's going lower and it gets to what we call a support level, all of a sudden there's enough buyers to support the stock so it doesn't go down any lower, and hence the name support. A resistance level is the opposite. It's a level where there's a lot of selling, there's more supply than demand. So if a market is going higher, when it gets to a resistance level, there's enough resistance or enough supply or selling that the price stops going higher. So a resistance level and a support level can stay intact for a long time, longer than you would even think. As a matter of fact, they can even shift back and forth between support and resistance. Some price levels are more important than others. Market memory refers to the fact that these can stay intact for a long time. Now, the CVS chart here is just a good example. You can see it on a lot of charts, but there's some pretty clear examples here. So way back in July of 15 and August of 2015, it hit resistance around the 111 level. Guess what? Fast forward 7 years later, January of 22, where does it hit resistance? The same level. Now, why would there be resistance at a level there was resistance before? Well, there's people who bought up here who, believe it or not, probably held on their shares for so long. And they finally said, oh, if these things get back up to my price level where I bought them, I'm going to get out so I can finally get out at break even. So remorseful buyers placing sell orders can make the level that was resistance become resistance again. Now, you might say no one's going to hold on to a stock for 8 years and be underwater. And you know what? Sounds kind of unusual, but charts don't lie. We can see it right here. Here's the $83 level. This was resistance for 2.5 years. So January of 17 all the way to actually even earlier. Yeah, so like November of 16 to like November of 18. So more like 2 years than 2.5 years. So I guess I'll make this little adjustment here, but you get the point. Um, the support down at 52 was intact for a year. February of 19, February of 20. All right. Why would support stay intact? Well, this is not because of buyer's remorse, this goes to seller's remorse. There's people who sold who, when the price goes higher, they're like, I shouldn't have sold. And they tell themselves, if the price ever gets back to my buy price, I'm going to buy my shares back. So if you have enough remorseful sellers placing buy orders, the level that was support can become support again. Now look at this one, 76.50. First became resistance in December of 19. Came resistance in January of 21. Became resistance again in April of 23. Became resistance again in July of 23. So this is over the course of 3 years here. This particular price level stays intact. You can even see some that I didn't even see before. Like, look at this one here. $90. Resistance in May of 21, support of November 21, support of June of 22, support of October of 22, and then resistance in February of 23. Now, look at this here. This particular price level here, which is 73, shows how these levels can switch back and forth. What was support became resistance. This also happens because of buyer's remorse. Just like the level that was resistance becomes resistance again, because you get people that bought up here that are like, this ever gets back up to my level, I'm going to get out at break even. So buyer's remorse can keep resistance intact for a long period of time. Buyer's remorse could also turn support into resistance. There's people who bought down here who, once the decision or once the price went lower, they decided, I made a mistake. I should have sold up here. But I'm going to hold on, and if I can get out at break even, I'm going to. So what was support can become resistance. So this is March of 23, June of 23. What was resistance can become support. There's people who sold here. Now this is seller's remorse again. They want to buy their shares back if they can get them for the same price they sold them at. So when the price goes higher, you got people that say, if it gets back to my level, I'm going to buy my shares back. All right. So support can become resistance. Resistance can become support. Once again, here we see support becomes resistance. People bought and then the price falls out of bed. When it finally gets back up to their price, like, I can finally get out of break even, I'm going to. So you get people bought here, remorseful buyers from here, sell here, remorseful sellers from here, buy here, remorseful buyers from here, sell over here. And again, we could see another level where support was intact. September of 23 to basically early this month, November of 23. People sold and then the price goes higher. A lot of them tell themselves, I made a mistake. I should buy my shares back if I can get them back at the same price I sold them at, so forth and so on. Anyway, the bottom line is what I wanted you to see today is this concept of market memory. Certain price levels are more important than others, and these levels that are important can retain their importance for a long period of time. It could be weeks, months, and as we can see here, even years. All right, that's it, everybody. Thank you so much, and I hope to see you soon.